I'm Tanya Schulte with the Profit Constructors, where we help you run with the big dogs. Recently, Belinda, who's been watching our videos, asked a great question about using estimates in QuickBooks Online when you don't progress invoice and when your projects are funded through bank draws. Before we get too far in this video, we need to clarify something that completely changes the accounting. Are you building for a customer, or are you building spec homes that you own until they sell? These two situations look similar in the field, but they are totally different in QuickBooks Online. All right, let's talk about if you're building spec homes. If you're building on spec, you are not a contractor working for a customer. You're a developer building an asset you own. So it moves away from contracting into real estate developing. That means there is no customer, there is no accounts receivable, there are no progress invoices, and your bank draws are essentially loan proceeds, not revenue. Everything about the job flows through inventory on the balance sheet. All the costs, materials, subs, labor, permits, fees, they all get capitalized to work in process, or sometimes it's called construction in progress or construction in process, inventory until the home sells. When the bank funds a draw, that money gets posted to the construction loan liability account, not to income. Revenue, actual revenue, is recognized only when the home sells. At that point, inventory is moved to cost of goods sold, the loan gets paid down, and only then does profit show up. You can still use an estimate, but it becomes a budgeting tool, not a billing tool. Now, I want to be clear about something. Spec home accounting is not the Profit Constructor specialty. We work almost exclusively with commercial subcontractors. That's where our deep expertise is. Job costing, percentage of completion WIP reporting, which is different from this type of balance sheet WIP reporting, labor burden, cash flow, and all the systems subcontractors need. But even though spec building isn't our core niche, we do understand how it works. And if you want the best education out there on this type of real estate accounting, one of my absolute favorite teachers is Seth David from Nerd Enterprises and his show Talk Nerdy to Me. Nobody explains this better than Seth that I've seen. Now, if you're not building on spec, if you're actually building for a customer who's under contract and the bank is just funding the project, then you're in a completely different workflow. You do need your estimate. You do need your products and services. Those items need to be used on both the cost side and the billing side. And then every bank draw can just be turned into a progress invoice created directly from the estimate, even if you never send that invoice to anyone. Inside QuickBooks, this is the best way to keep your accounts receivable accurate, your estimate versus actuals meaningful, and your project profitability reports reliable. Remember, in QBO, the estimate becomes the billing blueprint, and even if the bank is the one funding the job, QBO still needs invoices to keep your numbers honest. Here's the quickest way to know which workflow you should use. If you already have a buyer, you're a contractor. You should use estimates and internal progress invoicing, even if you're not going to send out that invoice. If you don't have a buyer and you're building a home as an asset that you own, you're doing a spec build. Your costs are going to go to inventory and your loans from the bank will hit liabilities. And revenue is only recognized when the home sells. Belinda, thanks for asking this. It's a great question, and the answer becomes more clear once you know whether you're dealing with a contract job or a spec build. Thanks for watching. I'll see you next time.